There's plenty of spicy news to discuss regarding AMC stock and Ape stock. There's been big drama just before the weekend here with after hour market trading, with AMC up about 60% and respectively the Ape shares absolutely tanked. This is due to a decision by a judge not to allow the conversion to happen of Ape shares into AMC common stock. But what does this mean for the company going forward? Is it good? Is it bad? Well, we see a surge now, but it means storm clouds are coming on the horizon. Remember, a few videos ago I said that there's no way that AMC will go bankrupt. They will just continue to issue new shares and will be able to continue to operate indefinitely. Well, things are changing now, and with this big increase we can see that market cap reached 4 billion. However, if we scroll down and look at the total amount of debt for this company, we can see that it's about 9 billions that they have on the balance sheet, and cash on hand only 500 million, give or take. But what's going on with the financials then in that case? How is the company performing? Well, before the whole pandemic, they were indeed profitable, but here 2020 we can see operating income dipping into the negative. So this is in thousands of dollars, and indeed it was the absolutely astronomical loss here for 2020, and then losses started to slowly reduce, but not fast enough. We see here that the company is still losing a lot of money. They still have this debt, and now they cannot issue new shares to continue to fund operations. And this is the storm clouds in the horizon. What happens when AMC runs out of cash? It's going to be a problem. Alright, so let's say that the door is closed here on issuing new shares. I don't think any corporate bank is going to want to give this company more debt. Maybe they can refinance, renegotiate sometimes, but at the end of the day, they need to become profitable. And I think that one of the ways that this theater chain can continue to survive and can pay down some of their debt would be to sell off some of the worst performing theaters and try to find a buyer for this, try to divest some assets, shrink the company, make it smaller, only continue to hold on to the most profitable locations, and then potentially the company can continue to survive and continue to operate. But let's not completely rule out the potential to issue new shares and sell them to shareholders. Maybe they come up with some new creative financial engineering plan to be able to cash in on this great retail trader interest that's in the stock. It's had a lot of media attention. There's a huge amount of retail traders that's invested into this stock that has great interest into it. So maybe they will want to continue to save this business like they did in 2020 to be able to continue to go to their favorite theater, and then they would be a part of a new issue once again. But only the future will tell. As I said in the beginning, this is a short-term gain. We see this surge in stock price, but it means a lot of bigger problems down the line. So it's going to be interesting. Of course, I always share for the apes. Of course, I hope that they will be able to continue to have their favorite business survive. But I don't think that there's potential to make a lot of money in this stock. Alright, that's been it for this video. Take care.